Hi everyone, this is Sana and Mona Ali here from the Property Twins. Today we just wanted to touch on a quick topic that we've come across time to time. It's more to do with using redraw accounts with your home loan. So you may be choosing to use a redraw account rather than offset accounts, but there's a number of considerations with that. Before you go and start using that redraw account, it's important that you determine whether the home that you're living in is going to become a future investment property, or whether the home that you're living in, whether like the funds that you're saving, whether you should be building them up in the redraw account, or alternatively, whether you should be putting them in the redraw. It's got significant tax implications there. I think that it's important. It's important to really figure out your strategy and what you're trying to do with using an offset account or a redraw account. Typically, in our experience, offset accounts allows you to maintain control of your savings. In comparison with redraw accounts, you do tend to lose control of your savings. Some banks, what they're doing is over the term of the loan, they are reducing the balance of your redraw. So for example, you may have $100,000 in your redraw, and as a term of the loan progresses, the bank will start reducing that $100,000. So that's one of the key things, and the most important thing is really to do with the tax implications that happen with that. These are the things that we cover with our clients on when they are setting up their home loan or an investment property loan. So those are the discussions that happen up front. So
and make sure that you seek your tax accountant's advice at the same time, because structuring finance correctly goes hand in hand with getting the right tax input as well.
So it's very specialist advice. I know generally the industry works like, you go to a broker or bank, and they put in the numbers and they say, yep, you're able to borrow XYZ, and this is the lowest rate that we can offer you. But very little thought is put into the strategy and where you are going in life generally. And if you're not really planning ahead, like say 5 years down the track, you decide, well, we're going to make this property an investment property, and you've paid off, like you've put money in the redraw. What are the tax implications of that? Or you might say, well, I've saved up $100,000 in my redraw, and that's sufficient for me to be able to purchase a $400,000 property, not in Sydney, maybe interstate. What do you do then? What are the tax implications of pulling that money out? So changes need to be made to the loan structure to maintain that tax deductibility, and all those things need to be planned ahead in advance rather than
and really focus on the strategy and the big picture, and that's why Mona and I, we like to call ourselves finance strategists rather than brokers who are doing loans and giving you a transaction. Here you go, here's a loan for you, but more about where you're heading and why you're doing what you're doing, and how you can maximize the cash flow, minimize the outgoings, and maximize the tax effectiveness of whatever loan you're setting up, and at the same time focus on getting flexibility, maximizing that opportunity for you and your family. And that should be really your focus, rather than getting that lowest rate product out there and just focusing on the product, because that's a much lower level of focus on criteria, but more about is your goal financial independence? Is it to give your family security? And really that should come into play when you're setting up redraw accounts or offset accounts.
So I believe it's very much of a strategy focus than just checking your borrowing capacity. I know from time to time we do hear from people, oh, can you check my borrowing capacity? We don't do that. You can go on Google and check your borrowing capacity directly, or you can walk into a bank branch and check your borrowing capacity there. If you're looking for strategy, and that's where we help our clients with having built our own portfolio and having clients who are building multi-property portfolios.
Starting with their homes, of course,
but it's a long-term planning thing. See, for example, you go to a GP or a specialist. If you have got specialist needs, you go to a specialist doctor, if you just have a flu, you go to the GP. Like for a general checkup, you go to the GP. But if you need specialist advice, you go to a specialist. So that's something to keep in mind, really, when planning for your home or an investment property.
And get that advice, when you're doing it, because everybody's circumstances are different. For all we know, you don't save up a lot every month, and maybe Redraw is the right option for you, but 9 out of 10 times, it's not really an optimal solution.
Yeah, and I think with home loans and investment loans, or mainly home loans, often it's after the fact thinking that, you've just gotten the home loan, have it sorted, and then many years later you may think about doing something. But why not start now and fast track that success and fast track that journey? Because like most clients that we talk to, they've got everyone's got a driver and a reason for why they're doing what they're doing, and some are doing because they want to have stability and security for their family. Some are doing because they want independence. Some are buying their home because they want to have some more space or backyard for their children and have their roots in a place to call home. So everyone's got their drivers, but like it's such an important decision in your life, and you're going to be having this loan typically for 30 years, or that's what the loan terms start with.
And it's so easy to fall back into that excuse mode that I'll just go the easy way and I'll figure it out later. But what's the price of figuring it out later? Do it right, invest that upfront time to get that right setup, whether that's for your home or for your first investment property. And obviously if you have multiple investment properties, then you need to review and see if that structure is correct to begin with.
Yeah, I guess ultimately it goes back to teachability and how coachable you are and how willing you are to get that specialist advice to enable you to move forward.
So that's one question. Actually, it's an interesting one. I got asked that last week from someone that, what do you look for in your clients? And my response to that was, I look for teachability in my clients. Are they coachable and willing to learn and follow someone who's done what they're wanting to do? Are they willing to focus on the bigger picture and their ultimate goal, whether that's financial independence or whether that's looking after their family, whatever? Are they willing to focus on that rather than products, features? And if someone is just solely focused on the low rates and the products and the features, then really their goal is not big enough and their driver is not big enough. They're focusing on little detail, which doesn't even matter, and it's simply a cost of doing business. It is important, but not the number one thing. And what else do we look for generally?
Well, we are looking for coachability and teachability, and some people, who are willing to listen and learn and grow, really, as individuals. And, we have seen our clients do that. And, we've had clients, in 12 months' time, they're onto their 4th property or 5th property. It's not everyone's cup of tea, but it's really... It's really about their dream and what they are wanting to do. So you may say, well, I don't want to buy those 4 properties, 1 or 2 are enough for me. But you need to plan for it. You need to make it happen and have a good enough driver. And I find when we are comfortable where we are, we don't make things happen. And if it's important enough, we make things happen.
So we can move away from our current situation or towards what we want. And towards, you could be just living a really amazing life and you just want to make it better. And it could be just you have a big nightmare that you want to solve. And what we found, people with a nightmare have a bigger driver to make things happen. And if it's there, then, you're really fortunate, if anything.
Yeah, so what's your dream or nightmare, really? That's the question. So I guess summing it up then, really, we started off with the video being about Redraw, setting up your loans correctly and, making use of Redraw or offset account. So with that, I would just, again, reiterate, really, it's important to structure your loans right, because if you're trying to save money by putting money in the Redraw, ultimately it may end up costing you more from an overall effectiveness perspective. It could be, it is going to have tax implications for sure. I know I used to be a tax accountant many years ago, not anymore, but I know from my prior experience and what we do for our clients day in, day out, it will cause tax implications, and it's very important that you seek specific advice And that includes your tax accountant, a good tax accountant on your team. So that's in a nutshell.
And if you're looking for that input, that's what we help privately with our clients, one-on-one. Obviously, no one-size-fits-all approach. So there's no straight answer here, whether you should do it or not. So if you would like to reach out, feel free to do so.
Yeah, and you have an awesome week. And if you've got a question, are you positive towards negative gearing to enhance the portfolio?
We never had negative gearing as our strategy. When we started building our portfolio, the focus was cash flow and maximizing that.
Yeah, but I think ultimately it comes down to individual circumstances. For some people, that negative gearing may be suited to them, but negative gearing could go out the window with government changes and policy changes. So that should not be the sole driver. The driver should be buying quality assets in quality locations where there's an upside for future growth and where population may grow or people will move in, because that's what will help you grow wealth.
But negative gearing can enhance your portfolio, Gyan, as you call out. It can help your borrowing capacity, but not all lenders let you use negative gearing to its well, let me give you this example. One of the major lenders, they assess you on 7.25 principal and interest repayments, but the negative gearing benefit is really on the actual rate that you're paying, which might be 4.5%. So obviously you're already being assessed harshly. So a little bit of negative gearing does help you along the way, but it's not the solution. It should never be your driver for building a property portfolio.
The driver is more on your goals and what you're doing it, what's leading you to taking
and do whatever then it takes, get the right asset selection or strategies to maximize.
And I guess it's a very common theme out there, because I think it's maybe perhaps education out there. Like, we don't really get taught in schools about money or concepts around money. So with negative gearing, really, I know there are businesses who sell the story around, well, you get these tax benefits and you get this tax refund and all of that, and that's where the shiny brand new properties come in and people buy those and they get sold this dream that they're going to be saving all that in tax. But is it really the right thing for them, really? So no, negative gearing is not something I would rely solely on. You need to have a quality asset in a quality location. And that's what our clients are doing.
And keeping in mind that, lenders do shave your rent significantly as well, depending on the postcode. For example, a lot of city postcodes with high supply of units, lenders are shaving the rent down to 50% towards your borrowing capacity. So asset selection is more important than just the negative gearing of a nice, shiny property.
And we've got a question: if I redraw my offset account and invest in shares, can I claim interest on it as tax deduction?
Sounds like tax
accounting advice. I'd recommend checking with your tax accountant and getting specific advice to your loan and your circumstances, Dinesh. So okay, that's it from us really for today. I hope you found this useful.
Any questions, comment below.
And if you're watching the replay, just comment below, and we look forward to speaking with you very soon. Have a good one.
Thanks, guys.
Bye.
See ya.